The general meaning of trial balance. Trial balance is a list of debit and credit balances that are extracted from the ledger on a certain date, including the cash and bank columns of the cash book. So once the entries, financial transactions are journalized, then it's been posted to the ledger account. From the ledger account, the list of balances are extracted and it is entered in a T-shaped record book, which is called as trial balance. Now this is yet another meaning of trial balance. A trial balance is an accounting or bookkeeping report that lists balances from a company's general ledger account. The debit balances and credit balances are listed under their respective fields. Now the condition for this trial balance is that both the debit and credit columns should be equal and same. Now what is the objective of preparing the trial balance? Why companies are preparing trial balance? It is a trial balance that helps in verification of the journal and ledger entries for accuracy, and it assists in the preparation of a comprehensive income statement and a statement of financial condition. And it also helps to spot the mistakes and to make the necessary corrections. So journal entries are posted and ledger is being prepared with the help of journal. Once when we verify the ledger accounts, also we check the balances of the journal entries and the balances of the ledger account. If anything is missed out, we'll come to know, and that can be rectified later. So any mistakes that is done is spotted out by the trial balance, because if there is a mistake in the journal entry and the ledger, the balance will not match. Both debit and credit will not match. So it is a way of checking the arithmetical accuracy or mathematical accuracy. And so we go back and check the journal entries and the ledger, and we are correcting the mistakes. Now, what is the significance of trial balance? Now, trial balance is prepared periodically, normally at the end of the accounting period. And the primary goal is to confirm that there are no unequal journal entries or errors committed in the ledger. If the debit and credit side of the trial balance is equal, it is said to be balanced. Hence, the trial balance helps the company to check the arithmetical or mathematical accuracy. Now, there are few preliminary steps involved in the preparation of trial balance. The accountant will make the ledger ready. The entries will be posted after journalizing the transactions. And the second step is that the accountant will also check to verify whether all the transactions have been entered and if any entries are missing. And if all the balances were prepared accurately, now the final step is to organize all the ledger accounts closing balances in the debit and credit array in a place named trial balance. So that is a record in a T-shaped form with particulars, debit column and credit column. And once it is totaled, the amount of debit and credit should tally. Now steps in the final preparation of a trial balance. Determine the balances of each account in the ledger. List the account titles and their balances. Then total the debit and credit balances. Now finally, they should be equal. The total of the debit and credit should be equal. So prove their equality is the last step. Now the rule of trial balance. Now all assets must be entered on the debit side. All expenses and losses must be on the debit side. All liabilities must be entered on the credit side, and all income and gain must be entered on the credit side. So this is the basic rule an accountant or any person who is preparing a trial balance should follow. Now this slide gives the detailed items which are appearing on the debit side of the trial balance. Now the debit side of the trial balance will feature entries from accounts like assets, drawing accounts, expenses account, cash balance and bank balance, losses, purchases and sundry debtors among others. Now for example, the items on the debit side under assets, under expenses will include the following. Under assets, all the fixed and current assets, namely property, furniture, computer, equipment, motor vehicle, trade receivables, cash and cash equivalent, cash at hand, cash at bank. Then other receivables will be entered. And under expenses, ordinary goods purchased expenses, rent, electricity, telephone charges paid, water, wages paid, insurance incurred, advertising, general expenses, bad debts, depreciation, carriage inwards, carriage outwards, returns inwards, discount allowed, etc. are being entered. Now the next is drawing account. That's also will appear on the debit side of the trial balance. Now same way, list of items that are appearing on the credit side of the trial balance are as follows. Capital accounts, income accounts, sales, sundry creditors, gains and reserves. In particular, for example, the list of items that appear on the credit side includes under liability account, we have trade payables, loans, bank, overdraft, other payables, etc. Then under income account, commission received, interest received, rent received, discount received, dividend received, and purchases returned by the customers. And number 3 is capital, and number 4, any provisions that are created. All these items will appear on the credit side of the trial.